Hey everyone, and welcome back to another episode of the EUVC Podcast. I'm excited you're here because today we're sitting down with Jan Lozek, the co-founder managing director of Future Energy Ventures, also known as FEV. Jan is one of the architects behind FEV's Carve-Out of E.ON, SE/Energy, and he led its fundraising and now serves his investment thesis across decarbonization, energy transition, and deep tech. Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. First up, ACE Alternatives. Every fund manager needs clean operations behind the scenes. From fund admin to tax and compliance, ACE handles it all across VC, PE, private debt, and real assets. They're trusted by some of the best investors in the world, and if you want peace of mind and a scale-ready back office, ACE should be part of your stack. Finding deals and managing your portfolio is at the heart of running a fund. Synaptic helps you discover startups before others do, and Portfolio IQ keeps your portfolio data sharp and ready for LPs. Together, they're essential tools for modern fund managers. When it comes to legal, you need a team that truly knows venture. Haynes Boone supports LPs, GPs, startups, and scale-ups across the full fund lifecycle. Smart managers make Haynes Boone part of their stack. We have two at EUVC. Tech Barbecue. Oh my God, who doesn't love barbecue? Europe's startup scene meets the loudest, friendliest family reunion ever at Tech Barbecue. From Nordic founders to global VCs, this is where ideas catch fire and relationships get real. If you're building or backing in Europe, Tech Barbecue is where you want to show up. And hey, if you've got a big fun announcement coming up, want to hit the headlines, or just want to tell your story out, do reach out to us because we'd love to help. And we've got some killer partners to help you get in the right media places. They've helped us land Bloomberg, CNBC, Financial Times, Forbes, and many more for the EUVC Summit, and we'd love to do the same for you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Jan, welcome to the podcast.
Hi, Andreas. Nice to be with you. Looking forward to the conversation.
So Jan, before we dive into everything and the origins of FEV, maybe you could just tell me your own journey. With a few words, where do you come from? Why is venture where you want to spend your life?
Yeah, good question. So maybe I started university. I studied business economics. I always wanted to become an investor and businessman. That was a little bit my thinking when I was young, and I had in parallel the desire for sustainability and any kind of topics with energy, renewable energy, which was already important at that time, because when I was 18, we had this terrible situation that we suffered from unsustainable chemical production, steel production here in Europe. Woods were dying, and there was a huge sentiment in the society that we need to do something. And I felt with 18 that that's also something where I can and should support. However, after university, I moved into tech. I was part of the so-called new market, and by the way, I was raised and born in Berlin, one of the most exciting cities I'm talking more from today. And then I started my journey as a tech co-founder, in the, I would say, e-commerce space. In that time, when the new market was coming down, I had to pivot like any entrepreneur has to do, and I pivoted my career into energy. And I started then with RWE as an investment manager. I was then in trading. I was responsible for the entire investment strategy of RWE to push it forward into the direction of renewables. And then in 2016, there was an amazing opportunity where I've jumped on building out a large venture capital fund owned by RWE in that time, 300 million euros commitment to explore and invest into what the new energy will be, but whatever it is. And we started then with the thesis. We doubled down with 50 investments on the thesis. We were quite successful. And from there, we moved, and just here I am.
Beautiful. And then tell me a bit about because now we're going to dive into some of the harder stuff, the origins of FEV. It's always interesting when you do a carve out of a corporate fund. So tell me a bit about the motivations to do FEV instead of staying completely inside E.ON.
When we started with FEV in 2016, the market was quite small, with the investment market. The investment size of the market was $6 billion at that time. And the market was full with corporate players, all the ones from Europe, E.ON, RWE, the various American investors, the oil and gas companies like BP, Shell, Chevron. Everyone had a venture team, and we were all looking into what's new, what's coming, and what investing into. And over the time, then in 2018-19, the market was growing hugely. And it became at least clear to me and to my team that if you want to really to make the difference in the market, you need somehow earlier or later go and being part of the investment market itself. And you can't operate such a business in-house from a corporate player because of focus, because of different situations you have to cover when you work for a large corporation, which is not set up and focused on venture capital, which is set up and focused on creating larger infrastructure business.
We have that podcast series dedicated to corporate venturing, and it is definitely clear that there are firms that are more successful at it than others, and it's oftentimes more about the parent company than it's the corporate venture firm specifically that decides whether it'll be a success. Tell me a bit about that carve-out process, though, because there are obviously many that always think about this. Now we've built such a great name inside the firm. We really love doing this. We love it as a team. And then comes the question, should we carve this out? Tell me a bit about what happened behind the closed doors back in the days.
Life is not as straightforward. If you then look back, maybe the story becomes more straightforward than it really was in life. But in general, it was a momentum. I think one key push for us to moving out, not for us to decide, but on the E.ON side or on the investor side to support us to moving out, was the consolidation of the German energy business by a large transaction between RWE and E.ON in 2018, 2019. And that changed a little bit the perspective, and it created also a new understanding of the new shareholders. So E.ON was acquiring energy, which was the home of the fund. And the E.ON, the new shareholder, was just looking into and trying to understand what does it mean, what's my role, what do I want to do, and so on and so forth. There was an opportunity to look back, to reflect, to take a white sheet of paper, write down what should be the best way forward from here. And there was an openness to discuss that at that time because of this more, I would say, market consolidation situation where we have been in as a fund. And on our side, we look back from the FEV team side, we look back and look, wow, what happened? No, we have been starting in a market with $6 billion. Now the market is growing in direction to $100 billion spent into venture capital business per year globally. And what the journey and what would be the next big thing, what we could do in order to stay relevant in the market. And we as a team, we identified becoming an independent manager will provide all the, resources we need to grow our business and to stay decent and relevant in the market. And we felt like staying in a corporate umbrella will not provide the scale and opportunity for us as a team. So hence, we had this both sides. Someone wanted to discuss and understand how to move forward from here. And us as a team with a clear understanding, we should move forward and we should become a real investment manager. And that was then discussed forth and back. It was decided in 2020. And then from there, we moved forward with creating the new fund, doing fundraising. And here we are. Final close of the fund will be in the next few weeks.
How did you end up doing it? Did you end up buying out the old portfolio of E.ON or?
Yeah, so the structure is really clean. So today we are the fund manager of what we call the first fund, so the E.ON fund, the 50 investments we've made in the past. And we have a management contract with the group, which includes the relationship, what we do, and also kind of an incentive in order to be really successful with that portfolio. However, the fund is so-called closed, so we are not doing new investments from that fund. We're only doing full-on investments and managing that to exit. And our target is here in 28 to close it down and then we look back and we have been successful, and we will do the next podcast then, I assume. So that's one structure. And the new fund is just a capital market fund. We decided to use Luxembourg as a home for the fund in order to attract international investors, not only from Germany or close countries to the German jurisdiction, so to say. And the team remains the same, 15 people, now professional investment manager. And we as partners in the fund, it's our company. We've invested our capital and investing alongside with other investors in the startups we like to sponsor. And here we are. So there's a really plain new fund where, by the way, E.ON is one of the larger shareholders. And there's the old captive fund, which is managed by us as an external advisor to the E.ON group.
Yeah, which I think is the best way to do it. Amazing. Okay, so let me hear from you about your thesis and kind of where you play. What is your thesis on energy in the future?
Simplifying it a bit, if you think what we are starting from the point how a future energy system will look like, and then you obviously have the core topics of you need more renewables, it's heating, cooling, energy, and so on and so forth. If you have a lot of renewables, you need to be more proactive, more real-time in managing your infrastructure, your grid, where the energy is or the electrons are moving, in order to solve challenges like huge demand and supply shifts from weather, from wind and sun, and so on and so forth. And this thesis also includes using AI, digital tools in order to inspect, to manage, to organize an energy infrastructure in a classical way. On the other hand, what we see as well is that cities becoming more and more owners of energy infrastructure, like buildings, industrial sites, and so on and so forth. And we invest here also in technologies which help really to decarbonize industrial sites, buildings, and so on and so forth. And if you think about cities, there's also this topic about e-mobility or e-transportation. And here we also believe that's an important puzzle of the future energy system, how we see it. And that are the areas where we invest into Series A and B stage companies. It's business innovation, technology innovation, but we are not an asset investors. We are not investing in new hardware technologies. We're really focusing on asset light structures here. We're investing into Series A and B stage companies with 2 million euros of revenues. We would support them with 5 to 10 million euros with our first check. And then we double down on the best performing companies. But we really believe we are great and good and have a lot of experience in energy. And we can say we are decent investment managers. So our focus is really energy, looking at the energy perspective of all these three elements I've mentioned.
Let's dive into them, each of them, because future energy, if we start there, where do you see us being in the European landscape right now? Where's the most important innovation happening? Many, when they talk about energy, are talking about sovereignty as well. I'd be curious to hear how you see that trend. Is it something that is it really meaningful, or is it just a bit of help in fundraising and in customer interest right now? But honestly, I think nothing has changed that much.
Yeah, good question. So what we see right now in the European energy transition, that a lot of that new technologies we support in 2016, 17, 18, they are becoming really part of the energy system. So there's a lot of, I would say, financial reasoning for using tools, digital tools, artificial intelligence, or any tools to make the system work. Because in Europe we have a problem. We have a challenge. The challenge is that some days we have 100% or more than 100% of the energy we need produced by wind and by solar assets and other energy assets. And so how to manage and organize that. And that's an actual problem. And what we see here is a couple of quite interesting developments. One is, for example, companies like, just naming one, Inspired. They are doing flexibility trading from battery systems. So grid systems are backed up with batteries, then you have a large-scale battery, and then you ask yourself, how can I commercialize my battery in the energy markets, And then you find out you can trade this. You can take energy and you can give it back, and you can take and give it back. So technologies which helps then to trade and organize that, are great tools and right important right now in Europe. The other topic, to have platforms which aggregating all this renewable decentral energy resources and then bring it into the market. That are obviously topics which are quite hot right now in Europe. The entire topic about battery as such, also how to run, how to manage, how to organize, how to reuse batteries, it's quite a topic. And I would say there's a huge desire applying more and more AI into the grid systems in order to become more real time. I think the other topic is, it's maybe a bit more US, but it's also a European topic. It's the topic of data centers and energy interconnect to the energy system. Here we look in companies which can really help us being more efficient with cooling, with using data centers as a flexibility backup for the energy system. That are also hot topics. On the more city side, I would say.
Can we stay in energy 1 second? If we start with the question of the sustainability of sustainable energy, so to say, you have many voices, especially in the US these days, saying, well, what you need is something that's much more sustainable in the production of energy so that you don't have these ebbs and flows. And it doesn't matter that much if you have 150% produced one day. If you're on the cold days, you're actually below what you need. Because what really is important is the integrity of the system. Is this a fair critique of wind and solar energy, or is it rather that this is a limitation of our current technology stack, but it will be fixed as soon as we have developed better battery packages / storage solutions, more interconnected grid systems, I guess, is also the problem. We can't move it from one place to another right now.
What we see in Europe, that we can cope with an immense amount of renewable electrons in the system. However, I fully acknowledge the discussion. And to me, in the very end, is a question of economics. What will be the right energy system in the future? Will we use new fusion technologies a bit early or a bit difficult to say, but there are arguments for it? Will we use carbon capture for gas in order to get the carbon out stored and then making a more sustainable in sense of operating, not in sense of CO2 emissions, more sustainable technology usable for and sustainable energy systems? So there are a lot of tools available, even batteries. If you think about batteries, how the prices are scaled down and efficiency moved up. And if you compare it, for example, to solar 100 years ago, like 20 or 30, and today, I would assume there will be a lot of efficiency also in that area. So it's difficult for me to say how will it look like. What we already know is the current system can afford a huge amount of renewable electrons, and we need the different tools and add-ons to the energy system to make it fully work. The only question which is out is, what will it be? Will it be nuke? Will it be like kind this bridge technology with gas, with carbon capture? Will it be batteries or a mixture of everything? However, to me, that's not the question. The question is, the planet is changing. No, we see it. We have seen it last summer, this summer, the next summer. We will see it more and more and more. With the tools we have at hand, we can do much more. I think it's not the question is not yes or no, this one technology or that technology. We can, in any continent, can deploy much more renewable energy tools than we have today online. We can use much more batteries than we have today online. And so I would advocate for using the technologies we have at most as we can. With that, we will be within the next 2, 3, 4, 5 years. And the market or the innovation market will find out what's the best technology to add on.
So in other words, to you, it's definitely 100% investable to be investing in the sustainable energy sources just as much as you would the old, so to say.
And it is not only an argument of decarbonization, it's also an argument of financials. No, if you think about costs of solar energy or wind energy, it's definitely less costly than any nuclear power plant or any carbon-fired power plant. It's not only a question of decarbonization, it's mainly also a question of economics, so getting access to cheap energy. And I think that's the moving force right now, and what we see, especially in Europe, and how this is mainly influencing right now markets.
Then let me ask you the question about, and you brought it up, the data centers, the need for more energy for AI. I'd love to ask you, you said something interesting, which was maybe it's more of a US question than it's a Europe question. Can you expand a bit on why you put it like that?
Yeah, we see the trend right now in the US, fully focused on data centers, a lot of projects. One of the largest technology companies are coming from the US. There's a lot of support of projects and things are moving forward. And then in Europe, I think there's still the discussion, what do we need our own technology giants? I see Europe right now really resetting their targets and ambitions with regard to what's our role in technology. Should we have our own Google, Facebook companies and support them? Or should we rely on Chinese and American technology in the future? And that's why I think it will also be in trend in Europe, and the people are driving forward projects. But in the US, it's much clearer, and there's a strong force already in that direction. And we see most of the startups in that space also in the US rather than in Europe.
So in the US, there is this dominant, especially in the tech circles, of course, but dominant narrative that you just need more energy. And it is front and center, most important that we solve as a society today. Do you see, is what you're saying that you don't see that conversation happening as much in Europe?
No, I would say the current narrative we discuss is it's a typical European thing. No, there's something happening and externally, and then we look into the mirror and asking us, whoa, what happened? Then we start to think how we should move forward from here. So I think especially in Europe, we have a common understanding we need more and more energy, and the renewable energy will also provide more use cases for energy because it's quite cheap, isn't it? And there will be and the energy use will grow and grow, and it's not only artificial intelligence in that sense, but I just wanted to mention that the focus of the discussion with regard to data centers is another one today in Europe than in the US.
Then let's go to cities. What use cases do you see as the most promising right now, and which ones do you think are maybe a bit overhyped?
What's quite interesting in Europe right now, and we also have looked into a couple of companies from the US in that space, it's the fleet management topic of EV trucks and EV buses. No, so we see, I think, a huge opportunity right now in Europe, because in Europe you are forced, if you run a transportation business, you're forced into using sustainable transportation modes like e-trucks and e-buses. It just becomes economic because of the regulations right now. And hence, if you have then fleets, you can use technology in order to manage that wisely in connection with the energy system. You can much better plan it, organize it, and manage it for the better of the energy system and also for the transportation to optimize your costs for transportation. That's one big trend. What we also see is there's a lot of larger industrial companies. They are starting really to use renewable tools in order to become more efficient with energy, with cooling, with heating. So there are a couple of startups providing tools and technologies in order to help larger industrial companies to start decarbonizing their industrial parks. That's one topic, and that's also true for businesses. What still remains strong is the further equipment of buildings with heating and renewable energy infrastructure in order to decarbonize buildings, larger building complex and smaller. So companies, especially heat pump companies in Germany, they're growing nicely this year because there's a huge demand on that sector.
Do you see any shifting interest in the decarbonization agenda over the last year, or is that more of a US phenomenon?
There's definitely a shift in interest and focus, and what happened in the US of resetting, so to say, ambition on that, or potentially resetting the ambition here is also happening in Europe right now. There are a couple of, I would say, more balanced discussion and less dreaming, more economic rationale in order to how to use decarbonization tools, when to use it and when not to use it, so to say, when it makes sense and when not. And we see in Europe, I would say it's not cold, but it's not a hot topic per se in Europe as in the US right now.
How do you navigate this as an investor? Do you see that decarbonization opportunities are inherently just difficult right now because you can't exactly see the global path forward?
If you look right now in the market, last data is from the first half year. There's mainly the data tell us most of the capital is going into later stage, into companies which are close to profitability or profitable, and there's less capital moving into early stage, and there's also less companies which are founded. It was coming down by 40% or so. That's the estimate for this year, isn't it? So what does it mean for us as an investor? First of all, being even more stringent with thinking it through about profitability and break-even passes of companies we wanted to invest into, to really make sure that we have a clear, scalable case which comes into profitability and gets then money in later stage investment markets. And for our current portfolio, we believe that's quite interesting because we have a couple of really good options in our first fund where companies are already at break-even or contributing a decent EBITDA margin to investors. And here we see maybe more interest in future for that cases. But generally, I think on an earlier stage side, now we are allocating with our second fund, a lot of competition, maybe pressure on pricing, but competition and pricing in a different sense, no? Because there's $150 billion of capital committed into that asset class. There are less deals, so there will be more competition because everyone needs to allocate it right now, isn't it? And that's now the question to do you the right picks and be prepared to pay a bit more.
Tell me a bit about some of the learnings from the portfolio companies you have in terms of operating through this very turbulent water.
So generally, companies from our portfolio which can't prove in real way into profitability or break even, they have difficulties to fund, to get full on investments. And here we as investors then need to discuss what does it mean? Do we want it to follow? Should we double down, or should we stop investing in the very end? And here we have a couple of companies in our portfolio where we have to make these decisions as we speak, so to say. And on the other way, we see companies which are developed quite nicely and there's investor interest. No, there you have maybe a pricing discussion, but here we get inbound interest in funding the company or providing further capital to scale that type of business further.
Can you share any learnings that are abstract enough for it to be applicable here or worthwhile sharing around how you make a decision or judge, should we continue here? Because this is the magic of deep tech. It's often not hard to write a first check. It's to rewrite the second and the third and the fourth.
Yeah, I'm happy to share a nice example in Termondo. Yeah, I'm not sure if you know Termondo, one of the larger players in Germany. The company is selling heat pumps for residential homeowners, PV systems, energy tariffs, and so on and so forth. And we've just announced a couple of months ago a 50 million debt facility for providing leasing products to customers. And this is a clear proof that if you scale your company into the right area, you get your funding in the market and you have this growth opportunities you can have. I think that's a really great example. We've invested into the company quite early when the company had less than 1 million euros of revenues. And today the company is one of the market leaders here in Europe and does decent revenues and EBITDA margins. And then on the other side, it's always not helpful to mention the names, but we are in a couple of situations where we discuss with our co-shareholders what to do or what are clear signs for us to fund further, isn't it? And here we work with bridge facilities, providing money in tranches. We're working with coaches or people experts to help the teams to move forward. And we decide not to do it anymore and just to stay and wait and let it go, so to say.
Can you talk a bit about how you best add support or give support to founders through that period?
Yeah, it's a very good question because then you are in this period when you have already a longer relationships. No, it's not the start and the honeymoon. In general, we have three resources at hand. We have a huge ecosystem in the, I would say, energy transition ecosystem. We have access to companies like E.ON or other larger companies. They can help startups to to sell their products, no? Or they can buy the products and then resell it or use the technologies for themselves. And this is quite helpful, but usually in this situation, if you are 3 or 4 years along the road, that's not possible anymore. Usually you have tried everything out, isn't it? And then we have in our team, we have a people expert, Fanny. She is a psychologist. She helps us, and that's more applicable in that phase. She helps them really us with finding new leaders, new people, helping with advice how to manage the situation. And then we have in our team Boas. He's a technology expert. He is helping here as well. And I think the simplest answer to your question is just turning any stone you find and look what options do you have. It's day by day. It's like entrepreneurial work, no? Just staying humble and try until we find out we can't do it anymore. That's, I think, the simplest and more to the point answer.
Yeah. Then let me ask you about future technologies, because when I saw that you invest outside of the pure energy realm, I thought, I'd be curious to understand how you kind of both to LPs explain/argue why are you the ones to do these investments, and also what internally guides you. When is this for you? When is it not?
So when we started with our first fund in 2016, we were really, really open. We did everything, cybersecurity. We invested into blockchain and ledger technologies quite successfully, but not for the reason that we have been experts, just lucky. And a couple of things we were really broad. We were inspired by the technology departments of larger companies. They were looking for new technologies for their businesses, and we were using that knowledge a little bit to train our investment capabilities. Nowadays, with our second fund, we are really focused on decarbonization and technologies which have a decarbonization angle. So we have decarbonization targets and thresholds for investing, and if we can't see it, we don't do it. For example, this type of data center technologies, which have a context to energy, that could make sense, for example, for us in the current fund. Other topic is we invested into Chloris. They are doing a verification of CO2 emissions in forest stations. I'm not sure if you know the company. It's quite nice case. They are from Boston, Italian founder team. So really interesting. And that's then in the carbon management or carbon space. And here we feel quite well equipped with our understanding of the decarbonization technologies and our knowledge we have built over the last years. And that's a clear context to our mandate. But we love to see cases where we can find the context to energy and on our horizon.
Yeah, makes a ton of sense. I always think about that right to play as a VC, because the fact that you have money does not make you a good investor. And I really think it's important that you know what's our swim lane, what's not. Unless you can also obviously be a generalist, but then there's another muscle that you work all the time, and then it's not the verticalized muscle. But I do think that when you are a vertical VC, it is important that you also make sure that you stay to your knitting. Okay, let me ask you a bit about the ecosystem and policy in Europe. I'd love to ask you first and foremost, if you just look broadly, there's this always the stupid awful saying that Europe regulates. The US innovates, China copies, and Europe regulates. Tell me, do you think that there's any truth to that? Do you think that we have regulation that help more than hinder? And maybe also a couple of examples of where you think that regulation has actually been a very good thing for your portfolio companies.
So I'm starting with the example where it have been very good for all of us. The solar case, isn't it? The solar case was heavily started up with taxpayer monies from Germany. Everyone was complaining about that regulation, but that was really helpful? At least that's my take on it, looking back now. And I think and maybe that's why Europe is also strong on climate tech, a couple of technologies need just a hand. It's really difficult to create that in the free market, so to say. And their regulations support this type of development. I think it's important. I would place the question with regulation Europe versus US maybe differently, but I fully agree. We are over-regulated, more rules. There's so many different countries in Europe, different languages, that even makes it more complex than it is. But I think the main topic, and Europe is diverse, no? I don't want it to generalize, but the main topic is ambition level, no? If you found a startup in In Europe, you feel great if you can exit it for 40 million or 50 million, and then you made a million or two or three. And the many founders are that are the many of the founders' dreams. In the US, if you set up a startup, you wanted to make it a unicorn, isn't it? We have been differently trained. We have different mindsets, and that makes the huge difference. And then, which is coming along with this mindset difference and really growth mindset, and I would say more also protecting, risk managing the world and the life. Part of risk management is regulation, no? You're coming up with this rule and this rule, maybe you know it from fund management. And I think our mindset and our way how we think and structure is not really helpful in this area of how to regulate maybe or how to motivate. And then the topic is this diversity of Europe. It's great, especially for living. I mean, we just a side note, no, we are really excited that so many people from other countries in America, Asia wanted to come to Europe to live with us because it's really a beautiful continent for staying. But I fully agree that there's too much regulation. But then one positive example at the very end, if you think a good regulation, for example, right now in Germany is heat pumps, no? Heat pumps are on the long term, they make a lot of sense. No, heat becomes cheaper, but they're just too expensive. And no one can afford to pay 30, 40,000 K for a new heating system and then changing the entire house. So in Germany, they came up with this heat pump regulation or subsidy law, which mainly means if you don't have sufficient capital, you can get up to 60% of subsidies to build in your house your own heat pump. And I think that's a good regulation. And that's also helpful. So democratizing decarbonization, in that way, it's great. But generally, I fully agree. My take is ambition levels are different, and we are used to risk management more. Our lives maybe sometimes good, sometimes bad.
Yeah. What's your view on Europe's competitiveness in energy compared to our global counterparts? If you think Germany is your better reference point, go Germany.
I think the main topic of Europe is we have the advantage because we do it. We have so much renewable, or so many renewable electrons in the system. As mentioned in the very beginning, some days it's more than 100%, and we need to innovate every day in order to make it work. Otherwise, it wouldn't. And I'm not sure if you're aware of this famous Madrid event and I'm not sure if I've mentioned it in the beginning, I am living in Madrid because my family is half Spanish, half German. And amazing, yeah? You sit on your computer, you have a podcast, not with you, but then everything is away. No, there's no energy anymore. Yeah, and that happens then.
Okay, let me ask you, the European or just the LP investor community in general, when it comes to investing in funds like yours in this space, what are the challenges that are being raised?
The main topic here is, even if we started in 2016, but the asset class is not very old. There's not a lot of track record, and there's this experience with clean tech number one. It was working, but it did not deliver a lot of returns, and that's not very helpful if you wanted to fundraise, isn't it? The main investors are asking about the typical things, track record, and the missing piece in the venture capital market of funds is track record. Now, the teams don't have the track record of 3 or 4 or 5 or 6 funds and providing returns to investors. And that's the missing piece and the most complementing element in being successful in fundraising. You have to explain in every detail what you're doing, why you're doing it, and why you are the right person to bring all this capital back to investors.
Yeah, what do you think allowed you to do it? Because you've been quite successful in your fundraise. It's not a small fund, and congratulations on that.
If you look just at the facts, we've invested into 50 companies globally in North America, Europe, Israel. We made our lessons, so to say, our first fund. The fund is quite successful. We are at 2x right now, and it may move up to 3. And there are some indications and proof points in our portfolio right now. We are an expert in energy, and maybe that also makes the difference here. That's the nice talking, no? But the difference, I guess I did the most fundraising meetings with investors, roughly counting over more than 1,000 meetings in the last 24 months. It's also a matter of, a number law, isn't it?
Yeah, It definitely is. And I think it surprises many every single time how much work actually goes into raising a fund. Let me ask you here in the end, the next 35 years, what do you think are the most important bets for you to make? What areas will truly matter?
I take it as a fund perspective question. For us as a team, for the current fund, it's really important now to find the right startups in the spaces I've mentioned now. We talked about data centers, flexibility trading capabilities for energy systems, and then decarbonization tools to decarbonize. There are a couple of companies to do the right picks right now that creates then the momentum for our new fund, for the second fund. Also very important right now is really to make our call how the next fund should look like. So we have a couple of ideas. We wanted to define it next year and then start testing our hypothesis the year after. I think it's really important to be diligent in investing, but also growing on the same side, because size matters. If you look at the current fundraising markets, most of the money goes to generalists, and size will matter even more in future. And that's why I think on our mind is really growing, being good in investing and growing as quickly as we can to keep making a difference.
What is the magical number? Is that because there's a lot of that talk about the barbelling of venture, that either you have to be maybe sub 100 or you have to be more than 500. Do you think that's true? Is that just nomenclature used by people that want to do clickbaity articles? I feel I'm a bit on that last side.
More than 500. Yeah, I would say you need organization like us. We need to go into the billions, no, in order to become relevant, and that more and more investors really they opt into the proven things. No, it's difficult. If you're small, everyone likes to back you up. Here, a bit money on their business. But if it gets bigger, you're getting big. But just always, it's not really helpful to stay in the middle. No, it may risk your entire future as an organization. That's a little bit my thinking. So my thinking would be, an organization like us, we should manage in 3 to 5 years from now a couple of billions of US dollars or euros in order to stay relevant.
Yeah, which definitely requires the fundraising machine works very well. Your latest fund, tell me the size of that and what you think the size of the next one will be.
Yeah, so we are still in closing. So 230 million is the current indication maybe a bit more, but 230 million it's quite sure. That's great. And the next one, it depends, on the strategy. However, if you look at the biggest missing problem right now, I would say growth will be a natural move for us forward, and then we would go above 500 million for raising, isn't it, to make it impactful and relevant. So that's how we think right now. And then we would be at least at 1 billion.
Yeah. Yeah, and assets under management. Yeah, that's very interesting. I think we have a big discussion there in Europe around the barbelling of fund sizes. I personally think that it's not that venture is changing. I think it's more that we as an ecosystem are just growing, and so are our firms. And for that reason, we're now seeing the first mega funds grow out of Europe and not become global, but stay focused on Europe, which then means that we will have, by natural extension, 10, 15 funds that are more than 500 million instead of just a couple. Let me ask you the final question here. For founders building in your verticals, what would be your biggest piece of advice for them?
3 things. One thing is ambition level. We should really, especially in Europe, we should become more bold about what we wanted to achieve and how to achieve it. So really try to make the impossible possible. That would be one advice. The second advice would be what we've discussed earlier. You need to turn any stone. If you wanted to fundraise, if you want to create a business, you need to stay humble and do everything you can do in order to move forward with your organization. And the third topic is, sometimes it's coming naturally, but it's really important to have the right people on board. You be mindful about your teams and how you grow them. That's you. I think the first few years you do everything yourself with 3 others, and everyone does. But you need, if you want it to scale, you need to come up with a organization. Need to create a system, a machine, and the machine only works with really great people in the machinery room. That would be the third one.
Yeah. Beautiful. Jan, thank you so much. And thank you for aiming for the skies, both for your portfolio companies, but also yourselves at FEV. Thank you so much.
Thank you. Thank you, Andre. Bye.
Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. First up, ACE Alternatives. Every fund manager needs clean operations behind the scenes. From fund admin to tax and compliance, ACE handles it all across VC, PE, private debt, and real assets. They're trusted by some of the best investors in the world, and if you want peace of mind and a scale-ready back office, ACE should be part of your stack. Finding deals and managing your portfolio is at the heart of running a fund. Synaptic helps you discover startups before others do, and Portfolio IQ keeps your portfolio data sharp and ready for LPs. Together, they're essential tools for modern fund managers. When it comes to legal, you need a team that truly knows venture. Haynes Boone supports LPs, GPs, startups, and scale-ups across the full fund lifecycle. Smart managers make Haynes Boone part of their stack. We have two at EUVC. Tech Barbecue. Oh my God, who doesn't love barbecue? Europe's startup scene meets the loudest, friendliest family reunion ever at Tech Barbecue. From Nordic founders to global VCs, this is where ideas catch fire and relationships get real. If you're building or backing in Europe, Tech Barbecue is where you want to show up. And hey, if you've got a big fun announcement coming up, want to hit the headlines, or just want to tell your story out, do reach out to us because we'd love to help. And we've got some killer partners to help you get in the right media places. They've helped us land Bloomberg, CNBC, Financial Times, Forbes, and many more for the EUVC Summit, and we'd love to do the same for you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.